Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me remotely is Phil Mackintosh. He's the chief economist at Nasdaq to review how policymakers and investors are starting to model out the global economic impact of the coronavirus as the race is on to mitigate the spread of the virus and provide stability to the markets, consumers, and the economy. Now, markets opened higher and immediately sold off within the first half hour of trade, despite Congress reaching a stimulus package deal to help support the economic fallout from the coronavirus. Phil, would you say that the deal was largely priced into yesterday's session?
Yeah, it certainly seems that way, doesn't it? I mean, we had one of the best rallies ever yesterday on almost no news. Clearly, the markets knew that Congress was working really hard to get this done. There was drafts passing back and forth between the houses all day yesterday, and it did get done early in the morning. So the news that we've got this $2 trillion stimulus itself isn't really news today, and you can tell that from the markets pretty close to flat performance.
Yeah, let's take a look at our first chart here, looking at some of the surges in the S&P 500. And yesterday wasn't the biggest single point gain, but it definitely made the top 10.
Yeah, I mean, it just made the top 10. But what's interesting is looking at all those other dates, we are in pretty extreme company. I mean, there's world wars, there is depressions, and there's great recessions in there. And so that's the kind of economic outlook that we've got to deal with. And that's why the market sold off as fast as it has the last few weeks. And it's why the government is looking at spending $2 trillion, which is 10% of the US GDP for the whole year. I mean, it's a huge number that they're looking to spend fiscally to support this. The Fed has made some pretty amazing measures to support the bond markets and liquidity as well. This isn't unprecedented, but it's pretty close to wartime stress on the market.
All right, and speaking of GDP, let's take a look at our second chart here, because now we're starting to talk about the scale of the shutdown and how it's starting to impact economic forecasts. They are starting to wind down at this point.
Yeah, and we had a little look at this when we saw what China did. I mean, obviously, China's a good month or two ahead of us, and their PMI index fell from 50 to below 30, which also accompanied huge shutdowns of public transport, movies. A lot of people didn't go to work. Factories were running at 50% capacity. So you can kind of see what's going to happen when you shut down the economy. There was a really interesting chart going around yesterday saying that more than half of Americans weren't at work. So you can kind of see that production is going to be down. The question is for how long? And so as that reality kicks in with the global markets all saying that we have to quarantine and shut down or lock down markets to stop people spreading this between each other, the question is, are we going to be like China and have a 4 to 6 week period like this with a lot of people not working, and then suddenly we're all healthy and we're all back to work and we're all back on public transport and we're all going on our delayed holidays and conferences? Or do we run the risk of stopping too early and having a lot of people nervous to do things like that, have the caseloads start to re-accelerate and have to do it all again in 3 more months or 6 more months, or maybe like we had with the Spanish flu where it comes back full force and a year later we're still dealing with it, and the economic impact of people being scared to socialize and sit in restaurants and travel and take holidays. Yeah, some of the forecasts that are coming through now are dramatically lower than they were 4 weeks ago. I mean, the IMF and Goldman Sachs are both saying that we should expect a recession like the GFC, the global financial crisis, or maybe even worse. They're looking at like a 4% drop in US GDP for the year. Others are forecasting worse GDP drops than China saw for the quarter, up to 40% down for the quarter. So that's where you really need the bounce back to come in to sort of offset that big drop too.
So basically, we have to get this right the first time or find a vaccination so we don't go on the same cycle again. But Phil, like we like to do each day, let's end this on a good note, because if we take a look at our final chart here, global new cases are starting to stagger down and become stagnant.
Well, yeah, maybe.
Yeah.
I mean, there's a lot of news about whether the testing is global and broad-based enough. But obviously, as kind of a global society, we're starting to do the right things. Lots of countries are now in lockdowns or socially distancing, and we know from China and Korea and their experience that it works. It helps to stop the spread. And actually, if you can social distance for long enough, it stops enough of the spread that people recover and become immune and don't spread it anymore. And so if we can slow the spread, we'll make the hospital's capacity load stresses lower. But hopefully, if we can stop the spread for 3 or 4 weeks, we might actually stop the virus in its tracks, because people will get over it and become immune, and they won't have passed it on, and there'll be not many people walking around with the virus in their systems anymore.
All right, and we can get back to normal and get back to work. Phil, as always, thanks so much for joining me.
You're welcome, Jill.
All right, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.